Hey y'all, it's been a while since I actually made my last video, so I'm about due to make another. Right now this is a trader's alert for the broad market, and I'm including in this the DIA, which is the Dow Jones Industrial Average, the S&P 500, which is the S&P 500 index, and the QQQ, which is the ETF covering the NASDAQ. Right now, I'm giving the alert out that everything is looking pretty bearish. First, we'll go with the Dow Jones. Now we'll go with the S&P 500. I actually already drew all this a little earlier. Everyone that has seen my video on triangles should be familiar with this one here. This is right here a short term, and I mean short term starting October 25th. The first top is beginning November 7th. Short term descending triangle, and as I mentioned in that other video, these patterns are usually very dependable and often break out to the downside. So right now we're taking a look at this descending triangle, measure from the extreme top to the support line, and we do our measuring formula to see where we think the market's going to go when it breaks through. Duplicate that line, move it to here. Okay, so looks like the market is wanting to move to a, hold on a second. Looks like the market is looking to move to 1120 in the S&P 500. Does that correspond to a support level? Not really, so I'm not going to believe that one. Instead, I'm going to say the closest and most realistic support level to that is the 200-day moving average, at least. So there's our 200-day moving average. Another valid argument would be to say 1130, since 1130 looked like a kind of tough support to get through. Actually, yeah, it's definitely gonna be 1130 here. I'm gonna zoom this out so I can show you how important that 1130 level was. As soon as I can delete this. Yeah, remember over the summer. Here we go. Draw a line, 1130. Put it across, 1130 thereabouts. And extend that. See, one touch, two touch, and then three touch, and then it uses as support level. So that's where I'm guessing 1130 in the S&P 500, and we'll see that breakout in about probably by next week. Next one is Dow Jones Industrial Average, DIA, which is the ETF that corresponds to it. We see something similar here. First we have our support line, and then we have our top line. This formation is a little weaker than the one in the S&P, but it's probably because it's an ETF and subject to more market noise. And same thing goes on with measuring formula. Duplicate that, move it to here, going down to 10,550 thereabouts. We zoom out. Is that level significant? As of this point, that corresponds to one resistance level, but by the time that this breaks out, at least, it should also correspond to about the 200-day moving average. So that's our target, 200-day moving average, and bouncing off that. Next one, PowerShares QQQ. Here we see, and Thinkorswim is detecting the pattern for me. Now they say it's a channel up. I don't believe that. I actually believe that. Here, I'm gonna get rid of that. Start down here. there's one view that we can do. Which gives us a rising wedge formation. That's one, and if we were doing that, it already would have broken through, which is one bearish signal. Second bearish signal is this rising wedge, which Thinkorswim is trying to draw for me. Which we see is converging here. So then our short sell would be as soon as it breaks below $52. And the measuring implication, once again, for this one, it is going to be the 200-day moving average, or thereabouts. Actually, if I turn the patterns back on, see what Thinkorswim says. Nah, it's not telling me because it's saying it's a bullish pattern, but that's where we're at right now. So short-term bearish in just about everything. I'm seeing descending triangles everywhere. Like I just shorted this one a few days ago, UHS, which was making a rising wedge. Also shorted this one, Nano, which was just making a new low, and also I was trading that one using that linear regression method that I showed you in the last in one of the other videos. So there's opportunities to make money, but not as much on the upside as a bit before. Alright, questions in the comment box. I'll answer them as fast as I can, as always, and thank you for watching.